All right, amazing morning, everyone. Please confirm you can hear me very loud and clear. I'll also confirm that you're not getting any background disturbance from um, any background disturbance. All right, please just help me confirm that you can hear me loud and clear.
Yes, I can hear you loud and clear, and there's
All
no
right,
disturbance.
okay. Thank you so much, Gold. Nice to hear from you. I'd like to say a very big welcome to Mrs. Grace Martins. It's been ages. It's nice seeing you again. Also, welcome, Ami. Now, this session is actually recorded for people who won't be able to join in live because I understand that there is a national grid. So, for some areas, they are actually heavily affected. So, today I actually said I'm going to be talking about futures trading. So, this concept I'm about to share with us today, this is actually a concept that I've been using to trade. All right, futures especially. Now, futures is not an aspect of crypto trading that should scare anyone, but it's one aspect of crypto that would compel you to exercise patience in the market, risk management in the market, and to a large level, very, very carefulness. All right, to an extent, a large amount of carefulness when dealing with futures. So, now when I made out the post for this session, I said, let me look at it. So I said we're going to be looking at these four areas: trading mindsets. Finding exchange listings, finding potential projects across chains, risk calculations on futures, and then trading mindsets. So, but I won't be going through them all in this order. I feel this should come first. Okay. I'd like to establish the session with this. Then we could go to this before we go to this, and then before we come here. So these two will be taken side by side, but we'll start with this and then go here. Now, the reason why I needed to do this is because you can't be talking about finding exchange listings, without knowing what to do after you are done finding them. All right. So let's start with the mindset. Now, everything you're going to be doing in the trading world, for every time you open up your chart to find tokens that have potentials, for every time you want to take a trade, a lot of things happens. What sets in, what makes you take that trade starts with your mind. Because one way or the other, you would have seen something that is compelling you to take that trade. So, whatever is compelling you, it have to come from a place of knowledge, understanding, or risk. Okay, because now all of these things are okay. Because sometimes people say that if you want to trade, don't bring in feeling, don't bring in fear, a lot of things. But the truth is, one way or the other, there are times you will take some trades out of fear. There are times you take trades out of emotional sentiments, all right? And then there are times you take trade out of conviction, knowledge, okay? So, and then I've seen trades work out in these three categories and massively. So most times I don't judge feelings, I don't judge emotions, all right? But when you trade, whether you are trading with feelings, you are trading with emotions, you are trading with fear, you are trading with strategy, no matter what you know or what you want to do, discipline is very important. Because what I'm about to show you, if you misuse it, you will likely trade the crypto future space carelessly. Because what I'm going to be showing you, it will help you understand how the futures market actually work, and then how not to overshoot your boundaries. Okay, how not to overshoot your boundaries when actually interacting with the futures market. So first of all, I want to assume that most of us don't know futures, and that's one reason why I want to start from more or less, like, let's say, the scratch. Okay, when you talk about futures, it's just talking about using leverage to trade. So when we say leverage, it means that you have a particular amount in your portfolio, but you want to trade that amount in your portfolio in a much larger way, as though you are trading with a bigger size of a portfolio. So if, let's assume, you have $100 in your portfolio, and then you want your portfolio to look like you are trading with $1,000, all you just need to do is use leverage. So, and what leverage would make $100 look like $1,000? That's 10x leverage, because 10x is 10 times. That's what it actually means. So in the leverage market, you get to see 1x, 2x, 3x, 4x. Sometimes you get to see over 100x. You get to even see 125x, depending on the exchange. So what this means is this leverage, which is 1x, which is 1 times, multiplied by the capital you want to use for that trade. So if you want to use $100 for the trade, it means that it's going to be trading as though you are trading. If you use 1x, it's going to be trading that $100, which is 100 times 1. So that's still 100. If you use 2x, it will now make that your $100 multiplied by the power of 2. Not power of 2, sorry. Multiplied by 2, which is 100 times 2, which is 200. So your account or your portfolio will now start looking like a $200 portfolio. So what this means is the fact that if you use 2x, and you're trading $100, for instance, if you use 2x and then you are trading $100, so what this will now make your account look like, it will make your account look as though you're actually using $200, because 2x times 100 is actually 200. So if you open a 2x leverage position on, let's talk about Bitcoin right now, and then you use $100 capital, 2x leverage, that's $200. So what this means is, if Bitcoin here, where is Bitcoin? If Bitcoin here, Bitcoin is currently at 65,000. So let's assume you short, whether you short or you long. So the meaning of long means that you're expecting price to go up. All right. The meaning of short actually means the opposite, means that you're expecting price to come down. All right. So if you use a 2x leverage with a capital of $100 to open a position, let's assume you are opening a down position because you feel Bitcoin is going to go down. If Bitcoin moves by 5%, please listen to this very carefully. This is important. If Bitcoin goes down by 5%, let's assume 5%. So this is around 5%. If it falls by 5%, it means that you will make 5% of this $200. And what is 5% of $200? That's $10. All right. So if you are trading futures, what it means is you need to understand mathematics, the mathematics part of figures, so that you are opening trades and you are closing trades with understanding of what leverage you are using. Because in futures, this is the biggest problem of futures traders, and that's leverage. We are not saying that you will not lose money when trading futures, or you will not have some losing trade, not lose money. You will not have losing trade. You will have losing trades, all right? But when you are losing trades, you are losing trades with understanding that, okay, this particular position I'm opening, this is the risks involved. If this trade goes against me, this is what I could lose. You understand it. Because most times when people open futures trade, what they're only looking at is the profits they are going to make if it goes in their direction, which is a very, very bad ideology. While you are looking at the profit potential, also look at the risk possibilities. All right, because this is going to help you manage your position and then your expectation. So that's for 2x. For 3x, the same thing. So meaning that if I'm still using $100, all right, so what this will mean is $100 capital using 3x leverage is 100 times 3, which is $300. So if Bitcoin moves in my direction by 5%, it's 5% of $300, which is $15 profit. So this is how leverage works up to 3, 4, 5, 6, 7, 8, 9, 10. Just do the calculation and the mathematics. This is how leverage actually work. Now, the strategy I'm about to show us is very simple. And this is the strategy I use when I want to trade, most especially meme tokens. Because this strategy, that's what I use in trading meme tokens. All right? Meme. So most times I call it meme. Whatever I call it, take it that way. So I'm sure you know this name. So this is meme. All right? Let me make it bold. So this is meme. So I use this strategy to actually trade meme token. If you can understand the strategy for yourself, it can help you position for. So what this strategy can help you do is it can help you position for bull run. All right? Because this is how bull runs actually work. A lot of tokens can pump at different times. And then, if you are not invested in those tokens earlier, when they start making the moves, you could miss out. So, and this is how these tokens actually make moves. Let me look for a token that's actually started making moves to. Okay, let's even use SUI for instance. All right, on a 1-day time frame. On a 1-day time frame. This I need to pay attention to this. Now, I was actually planning to buy SUI, but SUI is actually it's not actually a meme. Okay, it's actually a coin. All right, it's the native token of the SUI ecosystem. I was planning to buy SUI at this level. That's how I even marked it. I was going to enter. Got carried away. SUI was moving, and then now this is it. Most times, most of these projects, what they usually do is, if you look at their daily candlestick, you will realize that they will just be moving small. So let's assume from this candlestick, from this to the top. So in a day, it did 14%. 14% might not look so significant, but if it keeps doing 14% every day for 10 days, how many percent is that? Is that 140%? So this is the character of tokens or coins most of the time. They move every day most of the time. So by the time you want to go and catch up with them, they have done over 100%. Because if you look at SUI, from this place I actually wanted to enter to current market price, it's like 103%. Not even the recent high. Current market price, like 103. If I had used a leverage on this to open this position, what it would have afforded me is 100% times whatever leverage I decided to use. That will become my profit. Okay, because the move up there was like 100%. If I use 2x leverage, it means that 2x leverage times 100% move that it has made, which is 200. 200% multiplied by of whatever capital I use is what I'll be making. So if I use $2, 200% of $2 is $4. Okay, because it means that the thing doubled 2 times. If I use $5, 200% of $5 is $10. So you need to understand that this is how the futures market actually operates. Your leverage consideration is important, and then you also have to pay attention to market movement of the assets that you're actually looking at. So let me go to the strategy. Okay. Now pay attention to this. You will need to get this calculation for this strategy very well before you open positions. Now, so before I talk about the strategy, let me say something about strategies, that you need to understand. It is more or less like a trader in the market who sells knockout. All right. If you sell knockout, one of the things you understand as a knockout seller, if you don't know what they call knockout, banger. All right. Or fireworks. If you sell fireworks, you sell knockouts, you sell banger. If you sell any of these things, one of the things you know is the fact that if you want to make money from selling these items, there are specific times in the market that these products actually move. So you can risk buying as many knockouts or as many bangers or as many fireworks during during the time or season, you know that this thing is going to sell. What I'm about to teach us is going to help us in the bull run. So what this now means is the fact that if you are going to be opening trade, or if you're going to be using a strategy, if you want to go all in a market, you don't trade futures every day. You don't trade futures every month. You don't trade futures every year. You trade futures because there is an opportunity. Don't forget this. If you forget this, it's going to feel like that statement VDM used to make, very dark man. You're gonna learn, okay, and you will learn in the hard way, because it is not every day, even normal product in the market is actually moving. So why would you come to futures market and expect it to give you money every day? If you trade futures market every day, there's more than 50% chances that you're actually gambling. So what you do is, if you want to have more profitable trades than losing trades, you target the market. So what you are doing is targeting. So you need to see some certain things that would, to a large extent, give you a higher potential of making profits than losses. So this strategy I'm about to teach you is not a strategy you can use every day. But if opportunity comes every day, use it. I used this strategy. I spotted an opportunity yesterday. I spotted an opportunity day before yesterday. I took the trades. They're on my Twitter TL. Okay. So if the opportunity show up every day, I use. But if I don't see the opportunity, I stay calm until an opportunity show up. If I did not get to see the opportunity and I take a trade, then I'm just trying to risk that money at that time for a 50-50 chance of maybe getting something from it. That's just the simple truth. Okay, so one of the things we've come to find out about, so let me even explain opportunities, because sometimes we could also mistake, because we might also mistake opportunity to be something casted on stone, in the sense that if I say it's an opportunity, it means that if I take the trade at that time, I must make it. Sometimes there are opportunities that come that might not give you profit immediately too. Okay, and there's some things might also look like opportunity, but you now realize that you lost out from that opportunity. It did not give you what you thought it would do. So that also happens. But the strategy is going to help you filter opportunity in a way that out of 100% of the opportunity, even if there are going to be 30% that won't work, 70% will work. So, and this is not something that show up every day. But guess what? In the bull run, you will use this strategy and you will milk the market well. So I needed to establish this understanding or this mentality so that you don't think this thing is actually casted on stone. So let's move to it. Now, so this is actually the strategy. This is what I do. If you actually look at the crypto space right now, you understand that the space is actually driven by narratives. So narratives in the sense that people are consistently and continually looking for blockchains that are going to move. All right, blockchains that are going to move. When we say blockchains that are going to move, if you paid attention very well, you realize that a lot of people are talking about SUI ecosystem right now. But most of you have not even taken your first trade on SUI. All right, and then at this point, because there's something Twitter is known for, when an ecosystem is about to breathe, they can intimidate you if they get into the ecosystem before you. In the sense that if you just do mistakes, say you don't enter that ecosystem, if you've not printed money, if you've not made money before the thing blow, you are doomed. What they will do to you is they will be like, well, I've been interacting with this ecosystem for more than 1 year now. I was telling people to interact, but they were fading. See, you would not be early to all the ecosystems. All right. But what I'm trying to show you is even when you are late, you can still milk. That is how, see, as a trader, that is how you should think. I may not be early, but whenever I show up, I must milk from that ecosystem. It's mindset. Is the mindset for this strategy. So this is what I do. If you pay attention now to all the ecosystems that are actually coming out, one of the things you will note is every ecosystem that is going to make waves must introduce meme token. Why? Meme token is the source of attraction now, based on current narrative and meta. Meme tokens is what gives a lot of ecosystem visibility first, traffic, volume, trading volume. So every ecosystem will just want to integrate memes so that people can just come and then activity can happen before they can start unleashing utility. Siri is building an amazing technology. For those of you who have studied, who have known Siri, studied white paper, and then have been following up on their development. But while they are trying to bring out an amazing utility, you can't take away the mini token effect from that ecosystem. Now, that mini token effect is your window for the strategy. Let's just come to the screener. Okay. Now, meanwhile, I don't know if Canelian is on this call. Okay, Canelian is actually here. Canelian, look at what we faded. You can't be doing this. We can't be doing this. Because sometimes, so I think community portfolio is about over $60 on this particular position. But let's see how it actually goes. I had to put it on watch list for a long time. So, but let's look at ecosystems now. If you look at this portion of my screen, you realize that we have the Tron, we have Ton, and the likes. So let's just pick one. Think how that would love to be. Okay, they're actually arranged alphabetically. Let me pick Su ecosystem. All right, and then show us something. Now, if you pay attention to all this ecosystem, one of the things is, if you want to start checking out all the ecosystems one after the other, you could go weary, because there are a lot of okay, I could toggle this to see the ones that pumped the highest. Okay, if you want to start going through all the ecosystem, maybe using the screener one after the other, you will get weary of tokens because there are so much. So, but this is what I do for every ecosystem that starts integrating meme tokens. One of the things I know about this market is the fact that everybody is more or less like in competition with one another. So meme tokens want to raise from the thousands of dollars market cap to the millions market cap. While they are building momentum like that, from thousands to the millions of market cap to the hundreds of millions, while they are moving, one of the things you will notice is that they start with what we call journey. There's a journey. It's more or less like a roadmap. They might not spill the roadmap to the community or tell you this is our roadmap, but every token that wants to do well, you can be doing well on your decentralized exchange, but you must come to centralized exchange if you want to access the broader market. Go and check this thing I'm saying right now. If you go to Solana ecosystem, there are a lot of meme tokens there that have not touched centralized exchanges. But one of the things you will notice about those tokens is the fact that they can pump to 100 million. Because see, I don't see a reason why you should have a token that pumped to 90 million or 100 million and it's not on an centralized exchange. I see no reason. Even if you don't want to go and list in Binance, because Binance will bill you $1 million first for you to hold BNB, to stake BNB, before you can even list. Let's talk about the tier 2 exchanges. Let's talk about the tier 3 exchanges. Why are you not listing there? Some of them to list there is like as low as $20,000, some $50,000, some $100,000. Next exchange, maybe $250,000. Okay. The truth is, if you check those many tokens that have done up to $90 million, $100 million market cap, and are not on centralized exchange. Before you know it, they lose their millions. It's a sure thing that tends to happen. If you find a meme token that did not lose those millions, it's 1 out of 100. It's 1 out of 1,000. I've seen this across so many meme tokens. I was expecting Solana to hit good amount, come to buy bits, you know, because the more potential, the more audience you command, the more visibility you should create to get in fresh hands to get into your project, so that old money can have momentum to keep retaining money. This is how Shiba Inu back then in 2020, 2021, this was how they were able to build momentum. If you look at every token that has broken even, back then, even before Shiba Inu, you will notice that new money was always coming in. Old money had reasons to stay, even if old money will sell, because you can't take correction away from the market. Because what is correction? Correction in the market means that people who bought early, they are either selling some or all of their holdings. But with the advent of new money coming into that project, money will keep flowing in, and the old holders could even have even much more hope to hold. So you don't just expect, some people don't just hold and say they are iron hand, because we've seen iron fist become wooden fist, because they put in $1,000 in a project, they held. Okay, maybe they put $100, it pumped to $1,000. They say they're iron hands, they are holding. Before you know it, the $1,000 drops to even less than $100. And now sometimes they get concerned and even remove the money at loss, or just even leave it there, hoping that it goes back to $1,000. So when projects are doing well on decentralized exchange, which is the very places that it's cool to find them before they hit exchanges, if you want to make more money. But if you are late, that is where you now invoke this strategy. So if you are late, you now wait for them to come to centralized exchanges and not on spot, because buying spot is almost the same thing like buying on decentralized exchange at current market price. Okay, you wait for them to come to the futures aspect. So I'm going to be showing you various exchanges and how I approach them with this technique. So I posted a link in the community platform, which is Binance_KuCoin_listing. Funny enough, it's not just Binance. They actually they don't list only on Binance and KuCoin. So this platform, this group, there are different groups like that. There are various groups like that. Funny enough, they don't even have enough followers. There are various Telegram groups like this. What this group does is all the listings that happens across exchanges, it updates them. All right, it updates them for you. It gives you the info. Now, for the most part, this is the beautiful part. For most of the listings that this platform shows to you, most times by the time they are announcing the listing here, the exchange, the token or the project have never announced it. So, okay, let's even try this. Okay, I checked because I think they have an API of most of this exchange, and then when most of the tokens are going to be sent, I think somehow, I don't know how they get the information, but I feel it's through APIs. Okay, so let's check this Pepe. Let's see if the project have actually posted it. So before I go to Twitter to start searching Pepe, I have to first of all check for the real Pepe, because there might be more than one Pepe. You always have to verify. If you don't see the Pepe on CoinGecko, check CoinMarketCap. So this is the only Pepe with the Pepe ticker. So let's check. So in the info, they actually said it's coming to Bit True Exchange. So that's information. So currently we can't know the market cap, but fully diluted valuation is 15 million, which is low, but this supply is too much. All right, but that's aside. This is under blockchain. Oh, Pepe Coin. Oh, I think this is a blockchain of its own. So I will actually get we might not get into all of that, but I just wanted to cite an example. Market. So let's check the market is actually in. So it's only on Kel. Is this Kel Swap? That's Chili's chain. All right. So this is actually a popular chain. Okay. So that's where the chain is. Now, so it's listing on that chain. Now, if you paid attention, please look very well. So there's spot. On spot, look at futures, perpetual, nothing. Futures, nothing. But even on the spot, they've not mentioned this. They've not added this. Be True Exchange. Let's go to their social media and see if they've posted about it. Okay. Twitter. Let's go to their Twitter and see if they've posted about it. Okay, pepper with a heart of gold, farmed using CHZ and Chili's chain only on peppercoin.com. Not for US and UK. Followed by two other people. Okay, motherfucker is even following it. Okay. So the last, okay, pinned post 11th, 13 hour. Who else working up? So they've not even posted this. New listing. Okay, gates.io, OKX. I think these guys posted it when they got on this. But Be True is coming. But these guys have never updated it in their community. So to a large extent, this Telegram platform, you get the listing even before the community people. That's more reason why I also like it. Okay, so you can even search for Pepe to even see if they inside the Pepe platform, if they talked about another Pepe. Okay, Be True. Okay, traded nowhere, gates.io. Okay, they mentioned when it was going to trade on gates.io on Saturday. Okay, let's see the time. The time was 6:27 p.m. So let's see. So 12th of October is Saturday too, but what time? Let's see. If they posted their own 10:40 p.m. at night, these guys posted it 6:27. Okay, so I don't go to the chat to see if it's pumped after they posted it in their social media handle, but this thing just gives you an idea that okay, for some tokens, these guys could post about the listings quite earlier, even before the project posts it. Okay, so that is one. So I get listings from these guys, and then you don't just go and ape into every listing you get to see. All right. So what I do is when I see a particular token, it's getting listed on Gate.io, it's getting listed on BitTrue, it's getting listed on Mex Exchange, it's getting listed on here. So that is how I took that trade on Puffer. Puffer, that was yesterday on Puffer. Now, I noticed that, I've been following Puffer in terms of their listing on this platform. Look at, since last week, it started from Gates.io. They listed there, they came to KuCoin, they came to Huobi, they came to, Futures, Huobi Futures, they came to Mex Exchange, they came to Poloniex, KuCoin, I think they updated the listing, BitMEX, BitTrue. So, these guys were just listing on different platforms, and pay attention. So what I did is, as soon as I saw those listing, I started paying attention to the project. All right. So first of all, let's go to the decentralized exchange. Okay, because these are some things I like paying attention to. If a token, all right, if a token is actually pumping, I don't want to go to centralized exchange to go and search for the ticker. For instance, if I do Puffer now, Puffer USDT. All right, look at, it's listed on all of these exchanges. Look at, it's even listed in the futures of Bybit on Mex Exchange. If I go to the spot of, let's say, Gates.io, where it was listed first, now this is on a daily. So it was listed like yesterday on Gates.io, even if the announcement has gone out since Saturday. The issue is you don't know how many days the token has been trading before it got to the first exchange. That's more reason why you will want to pay attention to the decentralized exchange where that token was actually listed. So I come to my my CoinGecko. I type in offer because I want to get historical charts. I want to know if this project has been in the market for a long time. What's the chart looking like? So that I open a position and then people can actually dump on me. You get the gist. Come on, come on, come on. My system is actually lagging. I did not say polka dot, I said POFA. Okay, so this is POFA Finance. Now, I want to go to the decentralized exchange. So first I want to know the blockchain. So it's on Ethereum. So I copy the contract address. The market cap is 64 million. Pay attention to this. You also have to look at the market cap so that you will know how many possible X's that this thing could also do after it has listed on futures. Because some tokens can have 200 million market cap. You know that if this thing is going to pump 100%, it will be like 400 million. It has to be 400 million market cap. Does it have that potential to do that? So those are things you also consider. So let me search for that token using the contract address on Ethereum. So what is attributing? So you pay is a process, pay attention process. So the first thing is check list a particular token and getting listed on a particular exchange. Come on. Okay. So getting listed on a particular exchange or different exchanges, it should start getting your attention. So what you now want to do is you want to go to the centralized exchange so that you know how long or how many days this token have been trading. Okay, so that you can, because all of these things increases your chance of having a profitable trade. Okay, now from decentralized exchange, this thing is showing that it listed actually yesterday, because it was even yesterday I took the trade as soon as I saw that it was coming on futures platform. Now first of all, think about it. See, if you are trading crypto, you have to bring common sense into the picture. All right, because what will make you money in web 2 or web 3 is how much you think and how smart you can actually think too. You don't need to be smart to think in a smart way. Let me put it this way, because sometimes I don't even feel that, oh, I'm very smart. No, you train yourself to be able to it's just like asking questions. All right, so it's listed on the centralized exchange yesterday. So let me even use 1 hour time frame. Okay, now this is it. Guys, look at this beauty. So, but the announcement has been going out before yesterday it's actually listed. So meaning that these people, they've not listed, but they've started talking to exchanges. They've started, even as they listed, they got on futures. It gives you an idea that these people have something. Because currently it's at 61 million market cap or so, and price is 0.61, meaning that when it started trading from here, the price was at 43 million market cap. I don't even talk about the fact that it actually pumped though. All right, but before the pump, one of the things that the project will just tell you naturally is the fact that these guys are actually in for business. They are serious. You have not even looked at their use case. Why are they listing? Why are they doing all of this? You did not even look at it. All right, but this one alone has given you some update that I feel these guys are actually serious. Okay, so as soon as I saw this, I just reached it. I opened a position. Now, how I opened the position was my security. So let me now show you how I look at futures in opening a position, because let me tell you the truth. Opening a futures position to a great extent is not even about your profit expectation. The more of your losses you can actually cut, the better your chances of making mind-blowing trades. What do I mean? There's this saying back then when we used to fight, that he who runs away today lives to fight another day. If you don't run away today, they kill you. You cannot come and fight another day. Meaning that while you are going into the market to fight for profit, have security that will always help you come back the following day, no matter how bad things go. That is the reason why I was trying to explain leverage to you guys, so that in this strategy you know how to apply leverage very well. If you go and check all the trades I'm posting on Twitter, you will find out something that is consistent about them. There's something consistent about them. Go and check them, all of them. I don't use more than 10x leverage. I don't use less than 10x leverage. Go check. I don't use more than 10x leverage. I don't use less than 10x leverage. Okay? Now, it's not because I like using 10x. It is because of the strategy I'm actually following. That's more reason why I use 10x. I can decide to use 20x. It means I will tweak the strategy to be able to accommodate 20x. But in today's world, not really today's world, but most of the times, what you tend to see is the fact that people just use leverage just because they feel if I use 20x, if price goes in my direction by 10%, that's 250%, which is huge. It is not about if it goes in your direction. What if it does not go in your direction? You should also put that into consideration. So I would want to explain leverage and how you apply them in the strategy for you to be able to accommodate whatever the market movement or price action wants to do. I think I've explained this to some people in my community. So, but let me explain it again. If you did not catch it the first time I explained it, please make sure you catch it now. Let me use Bitcoin as an example. I'm going to be putting Bitcoin on 1 week time frame so that you understand how leverage actually works and how to use it wisely. Now, if you look at this chart very well, you know that Bitcoin is coming from somewhere. Bitcoin, if you, I think this is Binance Exchange. I think Bitcoin got listed there in 2019 or 2018 or so. So, now look at this. Bitcoin moved from, let's look at from this price, $11,000. Currently, we are $64,000. Do you know that if you are to calculate percentage when price is going up versus calculating percentage when price is going down, those are two different phenomena you need to understand. If you understand this phenomenon, you'll be able to open trade without putting stop loss. If you decide you don't want to put stop loss. And that is why I use a 10x leverage. So let me explain it using Bitcoin. So if Bitcoin had pumped from, let's say, 11,000, we are calculating now. I use my calculation tool. From $11,000 to $65,000, guys, how many percent is this? This is 456%. Now, I want to explain this. Okay, before I explain this, let me do the second part. So we've done the direction from down to up when a token is pumping. When a token pumps from a lower price to a higher price, this is for Bitcoin, it did 456%. If it's going to fall from 66%, pay attention, oh, this is where the strategy is. If it falls from 66% to that same 11%, 11,000, from $66,000 to, let's say, $11,000. Guys, look here. How many percent are you seeing? This is minus 82%. What this is trying to say is the fact that markets will give you more profit in percentage when you are buying than when you are selling. I will say this again. You will make more money when you are longing the market and the market is really flying. And the market is really flying than when you are shorting the market. Because if you short Bitcoin at 66,000 and Bitcoin gets to 11,000, all you are making is minus 82% times whatever leverage you want to use. So let's assume that you are using 10x leverage. If I use 10x leverage and I short Bitcoin from 66,000 and Bitcoin falls to 11,000, I would have made 82% times 10, which is 820%. But if I'm longing Bitcoin from 11,000 to 66,000 with a 456% increase, if I had used a 10x leverage, I would have made 4,560%. This is the calculation I use in protecting my position. All right. So if I understand that this is how the market works, go and check most of your meme tokens. Let me look for a meme token. Okay, let me even use Redo. Now, Redo is, for those of you who trade on Ton, you will know Redo very well. Redo is a Ton project. Okay, let me use Redo because it has actually fallen. Because a lot of projects on Ton, they actually fell. Okay, now Redo got listed after the pump it did. So for those of you who follow the on-chain price movement, you will notice that Redo actually pumped very well. Let me use on-chain to explain this. I actually need you guys to really understand the concept so that Redo. So this is Redo, resistant dog. So currently the market cap is 32 million. Even when you are looking at it on centralized exchange, it looks like it's looking dust. But see market cap, very high. So look at this. This is on a 1-day time frame. So this guy came from somewhere. It came from these regions. And you can see pumps, massive pumps. Massive pump, massive pump. Now, let's bring that stuff into perspective. So let me get that ruler. So it's called price range. For those of you who don't know what I use, it's called price range. It helps you measure price range. So let's see if Redo moves from here. Let's assume if it pumps from here, it pumps from here to all-time high again. All-time high is where? Let's just use this. That's 336%. 336% from current market price to all-time high is 336%. Let's assume you market, all this market price action have not happened. Price is still here and you were longing, okay? And you were longing this market. You did not know that this market is going to dip. You did not actually know because the hype was so strong. People never knew that Redo was going to retrace, okay? So let's now assume that you did not know it will retrace. It now retraced. Now you can see we calculated from the current market price to the all-time high and we are seeing 336. Let's bring it from all-time high to current market price, assuming you longed it from all-time high. If you longed it from all-time high to this current market price, the loss is minus 77%. Minus 77%. So let me show you what the strategy is. Since I know that if price is going against me, because the reason why I need to teach this strategy is because if you go and look across different blockchains, a lot of the tokens, some of them are falling so bad, but we know that when the bull run comes, they're going to pump. For instance, most of these tokens on Ton ecosystems, by the time Ton pick up again, a lot of them are going to pump. But when they start pumping, will you be able to catch in on it or would you miss out? So that is it. So that's more reason why I'm actually sharing this strategy across other ecosystems. Okay, like for instance, even Tron, a lot of tokens on Tron are already sleeping. It could wake up again. Could. And then there are new ecosystems that are coming, like Aptos. A lot of people are talking about Aptos now. You might not be early into the ecosystem, but you can trace for some of these signals that you can use in cashing in on those moves. So now you can see just the explanation of this thing is almost taking 15 minutes. I'm just trying to show you why I'm paying so much attention to explaining so that we will catch it before we now delve into the strategy itself. So if I know that when prices fall, the value is lesser than when they pump. So what I now do is I use leverage that will be able to contain whatever depth is going to fall to. Simple and short. So let me explain. Let's come back to that sheet. So I'm going to minimize the sheet and put it just by this corner. Please, if you are following, I just need you to just unmute and then let me know that you're actually following.
I will choose all the way.
Okay. Hope we are not sleeping. Hope it's not boring.
Not
You
at
just
all. It
dropped
is
a
Yeah?
not
bomb now. How
worse.
will I sleep through that?
Okay. Okay. All right. So
Mm.
I think the text over here is kind of is going to be small, but let's see what we can do. Okay, let me just actually maximize it. So in using a leverage, okay, because for some of you, you will say that okay, I don't have $100, right? Because if you're a newbie, you can actually put this strategy to work. But for newbies, I would not even advise you to use $100. I would never advise you to use $50. Okay, start with something small that you can use in testing this thing out. Let me tell you the truth. If you want to test any strategy that will work, you can't test it with dummy money. When I say dummy, I'm saying demo. I think some centralized exchanges have demo. Don't use demo to test. Your mind no go dey there. Use real money. See, real money is the test of character. Okay, because all of these things play a major role in your trading career. So this is how I do my, remember, risk calculation on futures. This is how I do the risk calculation on futures. So if you're a newbie, let's assume that all you have in your account is $20. Maybe you got the $20 from, let me not even say hamster because it won't pay a lot of people up to $20. So let's say you made $100 from dogs airdrop. You now said, okay, because of this strategy I've actually learned, I want to use $20 to test it. Now, this is what I want to show you. If you're a newbie, you have $20 in your futures account. Immediately, what some people might likely want to do is they might want to use $5 out of it to open a position and use any X they want. You need to understand how X's are actually calculated and how it affects your portfolio. If you understand it, then you now apply it to the fact that you have more value when price is going down and you have more value when price is going up. When you understand and merge the two concepts, this thing is done. You see all the talk I've been doing since, it is over. So let me start with your portfolio. So that is where it starts from. Trading does not start with the assets you want to trade. Trading starts with your own portfolio. How much do you have? So let's say you have $20. Okay. Now, if you have $20 and then you want to multiply this account, how much increase do you want on this $20? So let me assume that okay, you don't want to be too greedy. You want to make 50% of this first. So 50% of $20 is $10. So meaning that you want to make extra $10 profit on $20. Now, but you want to start opening trade, but you want to also be careful so that you don't open a trade that will hook you. Okay? So what you can do is use the understanding of leverage by using risk calculations on futures that will help protect your full portfolio from liquidation. Because in futures, that's where you have liquidation, meaning that all of the money you have can be gone. So let me show this to you. If you have $20 in your portfolio and you want to do like Mr. Pius and you say, oh, I want to use 10x. I want to use 10x like him. Whatever leverage you want to use, listen to this now. And if you are trading with my strategy, don't use isolated margin, use cross. Never use isolated margin, use only cross. Whatever leverage you want to use, you have to make sure you divide that leverage by the total capital you have in that your futures account. Then it will tell you how much you use to open that position. Very simple. So what this means is, if $20 is all I have, so what I will do is, and then I want to use 10x leverage. So let me put them side by side. So I want to use $20, and then I have $20. I want to use 10x leverage to open a position. How much should I use to open the position? You will use $20 divided by 10x leverage. That will give you what? It will give you $2. That is the mathematics. Let me underline this. This is the mathematics. Okay? If you say that you have $20, you don't want to use 10x, you want to use something that will choke, you want to use 20x. If you are using 20x, this is for risk management for a new trader. If you're a good trader, you're a pro trader, you can do whatever you want to do. But if you're using this strategy, you have to maintain to this. If you say you have $20, you want to use 20x, what you have to do is repeat the same formula. Repeat the same formula. You are dividing by 20x leverage you are using. So $20 minus 20x is 1. It's $1. Now, let me tell you the reason why I'm telling you to divide by the leverage you're actually using. It's for your account protection. So let me start with let me group this. So let me separate this and start with this. So I have $20 in my account. I'm using 10x leverage. So, but based on this calculation, which tells me to divide my leverage by the full capital in that futures trading account, then it tells me that I'm using $2 to open a 10x leverage position on cross margin. Now, pay attention. So I'm using $2 because of the calculation I got, okay, to open a 10x position on cross margin. So this is cross margin. Now, what will it look like? So let me now show you using that demonstration. What this now means is, if I do this for redo, all right, pay attention. If I do this for redo, applying it in this chart, if I open a $2 position here, okay, if I open a $2 position here, and then price pump to all-time high, I use 10x. The percentage move from here to here is 366. 366. So I trade $ redo. Okay, so I made a profit of 366%. Now you made profit of 366%. Now you use $2 to open 10x leverage on cross margin. You traded redo, the price moved in your favor. So because you opened long, it gave you 366% profit. Now, do you know how much you'd have made on this $2? It will be the 10x leverage times 366, which is, in quotes, based on the position you opened, you have actually made 3,660% because you use 10x leverage. 10x leverage multiply every percentage move in that market. Now, 3,660% of $2. is what you have successfully made in this trade. So so we'll call this profit on $2. So let me bring up calculator. So it's actually taking time. So all you just have to do is okay, let's remove the 366%. 1000% of $2. Okay, so let's say what does 1000% mean? 1000% means 10x. It means 100% in 10 places. That's 1000%. Okay, which is 10x. 10x of $2 is $20. So 3000% is like 30x. So 30x times $2 is $60. $60. Someone is using $2 to open a position and is making $60 because price moved 366%. If you were trading in decentralized exchange, you would not make 3000% because if people who are trading on decentralized exchange, they are only getting 366%. But you traded futures with 10x leverage, you are getting 3000%, which is this. Now, because it went in your favor, don't forget. Now let's look at if it went against you. So let's look at loss on $2, because this session is not, I'm not trying to sugarcoat anything. I'm trying to show you real figure. So let's assume you lost. So let's go back to that thing. Now let me not even assume that the loss started from here, that you opened what will I call it now? You opened a long position and then it went short. Let's take for instance that you opened the short from the all-time high and then it has fallen so badly to this point. You use $2 with 10x. Pay attention, with 10x. With 10x, you've lost 77%. So loss on, no, okay, let's call it loss percentage. Loss percentage, let me separate the two. The loss percentage is minus 77. Okay, so now it's going to be loss on $2. So the loss on $2 will be 10x that you used multiplied by 77. So what would that give you? That will give you minus 770% loss. Now, how will I explain this? If you want to know how much that would be in terms of dollars, please pay attention to this. Very important. Loss of 770% on your $2 would be, so 700% is 7x, which is 7 times whatever capital you have. Okay, if it was 1000%, remember I said it's 10x. So if it is 700%, it will be 7x. 7x times 2, how much is that? 14, right? 7 times 2 is 14. So let's just say $14 minus $14. Guys, just look at this. Now you shorted, you long this thing and it went against you so badly, but with your $2, the position held it even up to this all-time low, or this low that it's sitting at currently. All you are losing is nothing but $14. But if this thing had gone in your favor, you'd have made $60. This is the tactics I use in trading my positions. Do you know why? So why is this so? The reason why you have to divide by the leverage you are using is the fact that if you are going to be liquidated on that amount that you have set aside for this trade, which is $20, if you are going to be liquidated on that amount, price will have to go against you by almost 100% from your level of entry. So let me show you what 100% will look like. 100% is all-time low is even 99%. All-time low is 99% from all-time high. But the all-time low in profit to all-time high is over how many thousands? So if you understand how percentage profit on buy position works in respect to percentage loss on sell position works, it will make your risk management easy. With this, I'm on loss of 770%, but my portfolio is not gone. So that's why I tell people, if you're going to be using this strategy, so if I say that $20 is the only amount I have, trade one token at a time. Okay, so that if a strong pullback happens, you know that you are dedicating that $20 to one token using 10x leverage, and then you use $2. So if you want to open two positions, have $40 if you are a newbie. If the trade have gone in your direction, you can open orders, because if you have made 366% on this your $20, meaning that you now have $60 plus 20, which is $80. It gives you the opportunity to open 4 more positions, because you have $80, $20 in $80 is 4 places. You can open 4 more positions on other tokens. This is the simple strategy I actually use to protect my positions, because you can't tell the future of this meme. Now, you see, this strategy is for projects you want to hold for a long time. So let's assume that Redo is going to do well again. Let's assume. We don't know. All right. But let's assume they start listing on different exchanges. Oh, it's looking as though a comeback is imminent. From this current position, you just want to be positioned. If you open your 10x to $2, even if it gets back to this previous all-time high, which is 189%, multiplied by your 10x is 1,890%. This is how these calculations work. No matter the meme tokens, if it's going to fall to all-time low, even if it wants to fall at least 99%, your position is still standing. All right. So let me help you understand why it is possible for those positions to survive. And that's why if you check your positions, when you open a position on futures, go and look at the liquidation price. If you try this approach, go and check your liquidation price. You'll be shocked that your liquidation price is so low that even you'll be wondering, can price literally get here? But we know that anything is possible. Price could get there. But you're not just taking trades just blindly. You are taking trade first because there are catalysts. What is the catalyst? You came to this place, you realize that, oh, okay, they just added 2 more. Hippo. How many of you know this Hippo? We will not buy Hippo. High risk of dump immediately after purchase. Okay, they even want you sell. Hippo is listed on Huobi Exchange. I'm sure most of you already know Hippo. I took some trades on Hippo. I even posted on my Twitter. So now this thing is even giving me information. I don't know if Hippo have actually even announced it on their platform. I don't even know what the chart is even looking like for Hippo. Let me see if I still have Hippo here. Okay, I even still have it. Look at what the chart is looking like. Like it has been falling. Okay, but just think about it. If these guys gives us an update that Hippo is going to list on Binance first before they post it, this one is easy money. So you are paying attention to things. Okay, so even if you want to buy Hippo, you look at it very well. Like, let's see on 1 hour time frame. 1 hour time frame is not even looking as though these people have gotten the gist. Okay, a pump could happen because this thing has been playing around. It's more or less like this is like a floor. This is a floor. It came to that floor previously, went back, this is also looking like a flaw, the current place. You could decide, okay, let me actually try this thing and risk it. Okay, you might even want to go and say, okay, let me check Hippo price so that it will even be looking as though this thing is Hippo. So for those of you who don't know Hippo, Hippo is actually on Seal ecosystem. It's actually a meme token. So what I even usually do is, okay, I'll still talk about that. So it's at 111 million market cap. So no project on Seal ecosystem has done 1 billion. We are talking about mini tokens. So if you find one you can ride with, awesome. Okay, or you can put some on your checklist, awesome. And then, okay, let me talk about that quickly. Sometimes you don't even necessarily need to enter at market price. You know, market price is an order type. You can choose an order type that would put the entry price above the current market price, so that you know that it's only a pump that can bring it to your entry price. You can just think for yourself and you'll find ways to enter. Find ways to enter. Because even if Hippo goes back to I think my even if Hippo goes back to, let's even call it this particular high here from this current market price, if it goes back to this place, that's like, okay, it's just 9%. 9% times your 10x is 90. Okay, so because most of you, by the time you see on my Twitter place where I'm flaunting 600%, it's a simple thing. The 600 and something percent is because the project moved by 60, okay, 618% is because it moved by 61%. If it had moved by 100%, it would have been 1000% because of the leverage I'm actually using. Okay, so this is just the simple approach. So the reason why it is possible for you to use a 10x leverage on a $2 is because by the time you take away $2 from 20, you have $18 remaining. What that will now tell you is when you remove $2, it remains $18. If you use 10x leverage for $2 to get liquidated, it means that price will have to go against you by 10%. Because 10 times 10 is 100. 100% of these full dollars would make these $2 go away. Then it will now want to ask for another $2 inside this remaining. So in this $18, you have about $9 here. $9 plus this current $2. That's like 10. So it means that price will have to go against you 10 times of the 10% that would liquidate this particular $2 for the full $20 to go. So this is just the idea. This is just the idea. Then you cannot start paying attention to these other two things. For instance, when I look at a project, I also look at because on exchanges there is amount of leverage limits for specific tokens. Some tokens you can't trade them more than 12.5x. All right, that's why I'm always at that very safe place of 10x. You know, because all projects, most of them will start with 10x at least. And then the second thing I could also look at is the project, how I look at the potential of the project in terms of, because projects have pump and dump impulse momentum. So what do I mean by that? Some projects, they can pump very fast and dump slowly. Some, they will dump very fast and pump slowly. Some, they pump fast and they dump fast. You need to look, the only way you will know is by looking at their chart. For instance, this one now, the current state it is dumping slow and pumping fast. All right, but during this period, is pumping fast, dumping fast. You can see the candlestick is telling you. You don't need to check it. It's pumping fast and dumping fast. But at the current stage where it is, it's in a cool-off stage where it is dumping slower than it pumps. All right, so you can also consider it when you are looking at a particular project. The only project in crypto that has dumped, should I call it 100% or less than 100%, that you and I know is Luna. And those type of projects don't happen every day. Now, please pay attention to what you are doing with this strategy, because you know that these meme tokens, most of the exchanges can rush to list it, and also they can also rush to delist it later. That's why I want to invest into projects that are listed on futures that have name one, or that looks like something that have name for the now that I'm entering. So it's not when people are no longer talking about Shiba, that's when you are longing your own Shiba. It's has it hot, that is when you are getting into it. Or even before it gets hot. For instance, Puffer was not hot. How many people were talking about it on Twitter? So what I did was, so these guys announced it. I realized it's on several exchanges. It's even on the exchanges that I trade on. So I felt, okay, I can do this. So this is what I do. So let me show you guys something. So I have a place where I had the group on my browser titled Sex. On this Sex, I have all the exchanges. Let me tell you the one I use the most. Now, you look for the exchange. See, you are not on an exchange. Let me say this and say it well. You are not on an exchange because the exchange is easy to interact with. Stop making that mistake. You don't join a crypto exchange because the exchange is easy to interact with. You use an exchange because the exchange will make you money. That is why you should be using an exchange. It will make you money than it will lose you money. So let me explain. If you deposit money on Binance will swallow your money. Leave it. Or if you put your money on Binance, to remove your money is problem. Leave it. It's not helping you make money. It's helping you lose money. So something I look at in the exchange is, so I use L Bank. I've not opened BitMEX. I have these other exchanges. I have BitGet. I have Nexi. I think I have BingX. So the what you should be looking for is, let me tell you the truth. When you start seeing most of these announcements, most of the exchanges like Bybit, we know that when a token comes to the futures of Bybit, that token is solid. But sometimes before they come to Bybit, most of those projects are already on some of these smaller exchanges. Like L Bank is doing the most now. BitGet too is doing wonderful. All right, BitTrue too. Mexi is doing well. All right, even if they have their own personal scoring, but if you trade your thing well, I don't use their P2P. I don't use anything that would give me issues with them. All right. So I learned that sometimes, was it last year or so, some people that were making money on their platform, they were not releasing their phone to them. I've never experienced it since I started using them. So maybe until I experience it, then I know what to do. So for instance, let's look at those exchanges. Because some of the tokens that you never thought were in futures are actually on futures on some of these exchanges, but you don't know. For instance, this is futures of L Bank. So let's see. Come on. Okay, so let me check for the ones that are pumping. Look at Bodin. This is Biden token. You guys know it. For most of you who trade on Solana very well. Look at the token here. Most of the mini tokens that are just coming up, most of them list on the futures here. They list here. Like if you are paying attention, look at the GOAT token. Let's just keep scrolling down. Look at Migos. Like most of the meme tokens that you don't even know. So whether you want to long it or short it, it is here. Okay. They have just a lot. They have a lot of meme tokens. Okay. So for instance, if there is maybe a ton tokens you want to hold for bull run, you could just decide, okay, I'll use this strategy on it and then put it there. Look at even Harris. You will never even believe that Harris can even make it to an exchange, but look at it's actually here. That's for Bitmart. Let's look at Mexi futures. So sometimes if I don't find the token on Mexi, if it's on Gates.io, I trade it there. If it's on Lbank, I trade it there. If it finally gets on BitGet, I trade it there. If it's on Bybit, I know that it has gained some level of solid ground. I trade it there. All right. So looking at their list of tokens, so my browser is kind of loaded at the moment. So let me allow it to take its time. So I'm actually not even logged in on all of them. I just wanted to show us what their interface are like. Okay, so this is for Mexi. You can see now. I even wanted to talk about this guy, Deep. Oh my goodness, Deep. I saw Puffer. I saw Deep. I made 150% from Deep. I left the trade. I said I will enter back, only for me to open. I thought I entered last night, only for me to open it this morning. This now done over 170% between yesterday night and now that I closed. I was like, man. So now this is it. So let me show you Deep. Um, I think Deep is on Sui ecosystem, or is it Ethereum? I think it's Ethereum. Let me check. These guys, they just listed too long ago. This Deep of a guy, I think it was just even yesterday or day before yesterday they listed, and they are on so many exchanges already. That is another thing. Those are another thing you look at, and the market cap was not. So let me check. Let me open it. We'll get to question and answer very soon. So the rounding of session very soon. It has actually even taken time. So it has done 159%. I even think they did some airdrop. See, market cap at 159%. That's 84 million. Meaning that it was even less than 40 million. Less than 40 million. So it's even on Sue. It's on Sue. Yeah. It's on Sue. I think they are DEX aggregator providing liquidity and a lot for the Sue ecosystem. You know, they are building a lot. Like, so let me copy the CA and take it to that screen. So just getting ready your questions. Okay. So while that is actually loading, so I've posted the link to this platform in the community. You can pay attention to it, and the PowerPoint slide is not so elaborate. If I had done a lot of slide, I would have said, okay, I could send you the slide so that in case if you did it. But if you actually still need the slide is not really it's really worth sending. But if you still need it, I could still send it. So I just wanted that Deep to open so that I just show you guys that for the last time. Okay. Including CARV, CARV. Okay. So it's even listed on chain 1 day, 7 hours ago. The fully diluted valuation is 344, market cap 87, meaning that all of their tokens are actually not in circulation. So okay, look at the guy has been in an old spiral. I entered the first hour. I'm not kidding you guys. It was the first hour, or because when I entered, I had made 200%, I left, and then the dip happened. So I said I was going to buy back before I saw all of this. You know, so these are some of the things you can also consider. If you check how many exchanges actually on currently, market, look at in just how many days they're on Gates.io, Bybit, they're on Next, they're on KuCoin. You know, and it's on an exchange. I mean, it's on a blockchain that is just pumping. I can tell you a lot of the people who are telling you that you are late on Sui, they did not buy Deep Book, except they got airdrop from it. Okay, so but with futures, you are also participating in the Sui ecosystem, even if you're not creating the volume and taking the transaction or the trades in the decentralized platform, of which I will still advise you to do. All right, because these guys, Sui is going to do airdrop, create volume on Sui ecosystem. Maybe at that time I'll do a session on how to interact there. But you could find videos on YouTube before then, to just arm yourself with some knowledge. So guys, that will be it for today. The class has the session have lasted for an hour 25 minutes. I hope you got value. Let me actually stop the